Okay, this topic is a section 3, the last topic for section 3, control account. Control account actually is quite straightforward in the IG syllabus. Even though they have three sections of it, they ask to understand the purpose of the purchases ledger and sales ledger control account, identify the book of the prime entry as a source of information for the control account, prepare the purchases ledger and the sales ledger control account to include the credits, purchases, sales, and so on. This is the item that we need to put into the control account. So we go through the slide first. Okay, what is a control account? A control account is contain the total of all posting made to the account in a particular ledger, which is sales ledger or the purchases ledger. Sales ledger control account actually is trade receivable account, which is we take all the credit customer. Purchases ledger control account is trade payable account, which is the supplier, the total credit supplier. The purpose of control account is that to check the accuracy of the purchases ledger and the sales ledger. It will help to locate the error and detect the frauds. At the same time, it helps us to get the total of trade payable and trade receivable. So it will be faster for us to prepare the financial statement if we want to. And this one detect the frauds because it's prepared by the two different persons. Staff A in charge control account, another staff will be in charge sales ledger or purchases ledger. So benefit of control account basically is the same, similar to the purpose of the control account. So provide a basic for the preparation for financial statement, which is we taking the total trade payable, trade receivable. Find the total trade receivable or total payable so that we can quickly prepare the trial balance and then we can get the final account come up, which is the financial statement. Assess the staff as efficiency. If a staff had no error, when the control account staff check the sales ledger account staff, then no error much, there is the staff have a high efficiency. Identify the ledger to the ledger, which is error has been made when there is a differences on the trial balance. Find missing figure in a single entry. Internal check to detect error and reduce the risk of individual acting dishonest because two different staff in charge the account. So that's why we can reduce the frauds. Because normally control account, for the control account is in charge by the higher level, which is the executive level. Executive level. Whereas for the sales ledger or purchases ledger, normally it's quite straightforward account. So we just get the assistant account to prepare on it. Okay, that is the reason that we can check different each party work whether it's accurate or not. Okay, next is where is the source of information can be gathered. All the information basically gathered from the book of prime entry, book of original entry. So take notes that it will not take from the ledger. For the sales ledger control account, take note all the information from the book of original entry or prime entry. This is an example that source document can be gathered. For the purchases information, we can gather from the purchases journal, purchases return journal, payment to credit supplier cash book, discount received from credit supplier cash book, refund from credit supplier also from the cash book, interest charge on the overdue general journal. The source document or information for the sales ledger control account, sales from sales journal, sales return from the sales return journal, receipt from credit customer cash book, discount allowed to the credit customer cash book, dishonor check cash book, refund to credit customer cash book, irrecoverable debt return of general journal, Interest charged on the overdue account, which is journal as well. Okay, the two account you must remember for this chapter is a purchases ledger control account. The format, debit side and the credit side are fixed. It will not be changed. And this purchases ledger control account actually sitting in the nominal ledger or general ledger. Debit side, we have balance worked out, which is smaller amount. When you have the debit in the debit side, so basically this is showing that you are the supplier owing you the money. This is your asset. Maybe you pay down payment to the supplier due to you are the new customer to the supplier. Debit, you have purchases return, cash book or bank or cash because you pay to the supplier. Discount received, supplier give you the discount. Contra entry, this one is to reduce the outstanding amount in here. So this will contra through the general journal to offset the sales ledger control account. Balance carry down. In the credit side, balance brought down the larger amount. Purchases interest charge, balance carry down. So balance carry down, balance brought down as usual will bring to the following month or following year. And take note that in the exam, they like to put in cash purchases, credit purchases. Only the credit purchases will put into the purchases ledger control account. Okay, next move on. Sales ledger control account is a customer account, which is a trade receivable. So debit side, we have balance brought down larger amount because this is an asset, current asset. Credit sales, bank, this is referred to the dishonest check. Interest charge refer to the income to the business. Balance carry down, balance brought down, this is a smaller amount, which is some of the new customer, you ask them to pay you in advance. Bank or cash, actually depending on what type of payment mode. Discount allowed is the discount given to the customer to encourage them to pay faster. Sales return is a goods return. Bad debt or irrecoverable debt is the same term. Purchases ledger, this is a contra entry to set off with the purchases ledger control account. Balance carry down and balance, same thing as usual because this is a set. The larger amount should be in the credits, might put into here, transfer to here. So basically we should have a balance worked out in the debit side more often. And take notes, there are two items that always get confused. If in the exam got the cash sales provision for doubtful debt, don't put into the sales ledger control account. Okay, reason for debit brought down in the purchases ledger control account. Why in here that we have the balance brought out in here, debit balance brought out in here? Why we have this amount in here? As I said just now, it could be due to the down payment. So here is some reason that caused the debit balance here. Overpayment to supplier, payment made without deducting the cash discount, forgot to deduct the discount received. Goods returned to supplier after payment of the balance due, payment made in advance to the supplier. Contra entry in the sales ledger control account and purchases ledger control account. There is a contra entry sitting in here. This contra entry in the purchases ledger control account, debit side. In the sales ledger control account, it will be the credit side. So this account will we call as a contra entry. So contra entry is basically that a contra entry is one which appear on the debit of the purchases ledger control account and the credit of the sales ledger control account. This entry is made when a sales ledger account is set off again and purchases ledger account of the same person or business. Means that the person is our customer, also our supplier. Okay, basically this chapter you have gone through and we're going to do the exercise for it. So go through the recording for the exercise and the past year question. So after you finish it, then you should get ready yourself to move to the section 4, accounting procedure. So today we end in here.